All right, all right, all right. So, welcome back, everybody, to the weekly family meeting. My name is Andre Green. I am your host, also known as Andre Talks Green. And every week we cover a different financial topic in the setting of if this was your family having a meeting around money. These are things you should have learned at home. And if you didn't, you get a chance and an opportunity to learn it here with this community. So let's jump right into it, okay? I'm going to go over some family meeting rules and then we're going to touch on the topic and we're going to talk about what we need to learn today or this week. So, family meeting rules. The sole purpose of the family meeting is for this to be a place to learn, share, and empower one another around all things that involve financial literacy and money. If you're looking for some get rich quick plan, idea, scheme, or anything that is not or anything that sounds like that, this is not where you need to be. Bye bye. Have a good day. See you later. This is not about quick money. This is not some scheme. We're not scamming. We're learning the foundations and the fundamentals, how to make money forever on repeat with different money strategies, right? We're teaching you what the 1% teaches their kids, okay? On many different levels. So we're going to start off easy and things are going to progress to a little bit more complicated and more advanced as we've covered all of the bases. But this is not a get rich quick kind of thing. I'm not showing you anything that's not real and tangible that you can pass on from generation to generation to create actual generational wealth, okay? So make sure you come to all the meetings with a pen and a notepad prepared to take notes because I'm looking to give you lots of information that you may not in digest all at once, but if you're taking good notes, you'll use this as a reference to come back and things will start to make sense as you start to apply them to your real life. Okay. Um, don't be shy. This is a family meeting. We're all family, y'all. We're all cousins and aunties and uncles. I want you guys to be expressive. I want you to communicate. I want you to ask questions. This is not a place to come. You just sit here, get bored, and kind of zone out. This is interactive. I don't want to just keep talking to you guys and there's no feedback. And if you're watching this on YouTube later on as a replay, leave comments, ask questions. I'm gonna be in there answering them. I'm gonna get you all the information you need so you're clear about everything. Okay. Family meeting will be about 60 minutes or less. We try to keep it nice and tight. Some of the older videos are much, much longer than that. And I think I lost a lot of people along the way. So we'll kind of keep it a little bit more succinct this year, okay? The one thing that I ask and the price of admission because I'm doing these weekly sessions for free, I'm giving you information that some people don't learn until they hire an advisor. You're getting it for free on YouTube or in a meeting. I ask that you share this with three other people. That's all I'm asking you to do. It's my way of giving back. It's your way of paying it forward. And to be honest with you, the algorithm shows things to people that share it with other people. So please give me the feedback. Tell me how we can be better, but also share it with your friends and family because this information is is impactful and powerful. It will change lives forever if used in the right way. Okay? Disclaimer, this is not financial advice. I am a financial advisor, but this is not financial advice. I'm giving you information for educational purposes only to hopefully help to educate you, empower you, and give you the direction that you need to start learning and doing things in the right way. Okay? So I hope that this information helps you learn, grow, and empower yourself to ask the right questions and take the right action. Who is Andre Green or who is Andre Talks Green? Right? I'm an investor, a serial entrepreneur, a mentor, an author, and a dad. Not in that order, but this is who I am. So I started working in real estate on my journey back in 2005. So I've been in that business for over 20 years, and I've had almost every job in real estate except for maybe two or three. Okay, I've done rentals, listing agent, buyer's agent, loan officer, mortgage loan officer, loan underwriter, commercial property manager, residential property manager, asset manager, worked for a developer. I'm still a licensed New York State real estate broker and a few other titles that I haven't said in there, but I have a lot of experience. I am an expert when it comes to real estate investing and growing your money in multiple ways through real estate. I also am the founder and principal of Seneca Village Insurance. We are a licensed insurance brokerage in 14 states and counting. We cover everything from life insurance to business insurance to general liability to construction, restaurant insurance, development, and many other licenses that we can assist you with. If you're looking for anything that involves the word insurance, we can possibly help you. So you can reach out to the team for that. I have raised personally over $350,000 in business credit across several business corps. The reason why I bring that up is because many of you are taught or hear that OPM is the way to go, right? There's a lot of people online trying to tell you get funding, get business funding, and use credit. I've been there, I've done that. I can give you the truth about it and where the pitfalls are. So lock in to kind of learn the full scope. I'm not trying to sell you anything, so I'm going to give you all the information. I started my investing journey in real estate individually in 2017. So I've been in that for almost 10 years at this point. I built a seven-figure portfolio in under 36 months, and I did that out of state. That's important because I live in an expensive market, which is New York City. If you are from the East Coast or the West Coast, you know how expensive it is to invest in real estate on the coast. Doesn't mean it's impossible, but it wasn't where I started. I started out like everybody else. I had almost no money, a small 9 to 5 job that was barely paying me anything, but I still figured it out and I built a very healthy cash flowing portfolio, which is more important than a lot of doors. We can talk about that on a different day. But I took all that experience and I put it into a book. I wrote it down and I actually created a book and a workbook. That's called The Long Distance Millionaire. That's available on Amazon, also available on longdistancemillionaire.com. If you want to learn how I invested, how I made 5 figures a month with cash flowing assets, that's all in the book because I used all of my 15 years of experience and I put it into one place so you can learn if that's what you're looking to do. Okay? So today we're talking about taxes. We're gonna keep this focused to personal taxes. Business taxes is something a little bit different. So we're talking about personal taxes today because it affects everyone. Whether you might have evolved or advanced to working running a business now, we all started at the same place. We all started dealing with personal taxes, and we're gonna be talking about personal taxes because when you learn that the game in this country, the biggest game, the only game in this country, in the United States of America, is the tax game. It changes how you think. It changes how you work. It changes where you look to put your money because you realize that taxes is the one thing that's always being taken from you. So you got to figure out that game to start playing it the right way. So who is taking your money, right? We're talking about why is Uncle Sam even pulling money out of our pocket all the time? We're getting robbed and we don't even know it. So we're going to talk about some of the basics, right, of what we can do. So if you're making money, you should know about how taxes affect you across the board. You're getting a W-2, right? You go to work every day, 9 to 5 or 3 to 3 or 8 to 3 or 8 to 4, whatever it is. You're working a job, you're getting a paycheck every single week. You need to know what what am I working for? What am I getting? And what am I not getting? What's coming out of my check, right? So tips that you should know about your taxes if you're an employed person, like many of us are. The first thing I want to touch on is your W-4. That's the very first tax document you fill out when you start a job, right? So what is a W-4? It's a form that pretty much you fill out to tell your employer how you want them to withhold taxes from your paycheck, which is what they send off to the IRS when it's time to start setting up your payroll. On your on your W floor, you pretty much tell the employer, are you a single person? Are you a married person? Do you have dependents? How much taxes to withhold from your paycheck? Because if you're a single and you have zero dependents, single zero is how your form is filled out. That is the highest tax person in the payroll system because you don't have any dependents and it's only you. So they take the most amount of your taxes up front out of your paycheck. Okay. Now let's say you're a single person or a married person, but you have 3 kids, 4 kids. Your your W-4 is going to look a little bit differently. So if you're single, you say single. If you're not single, you can say married, joint, head of household, and you say how many dependents you have. The more dependents you have, the less tax they take out. So if you have 3 kids, you're gonna put for married 3 on your form, right? Or to designate your number of dependents, which means they're going to reduce the amount of tax they take out of your paycheck because you have mouths to feed during every pay period. So you need more of your money up front versus down the road with a tax refund, okay? So I want to put this out there right now. If you are a single person with no dependents, you don't want to be putting on there that you have 3 or 4 kids. No one's going to check you right away. So you're going to get away with it. You're going to be getting much more of your paycheck up front. But when it comes to tax time, the IRS is going to know because you're not claiming for these dependents that you had too much money throughout the year. So now you owe them a bunch of money. You don't necessarily want to be in that boat if it's something that you cannot afford to do. So don't just try to get away with it like it's not going to come back to bite you in the butt later. It will, I promise you. Okay? So if you feel like you're working so hard but not making any progress, you gotta understand why, right? Your money is leaving your pocket every single paycheck. Every time you buy things, you're always paying taxes. You're bleeding money without realizing it, and it starts with your income. But keep in mind, every single time you buy something, you're paying taxes on it, and you're trying to figure out why are we paying so much taxes? You get paid, they tax you. You go to the grocery store, you pay sales tax. You go to buy electronics, you more sales tax. You pay your cell phone bill. There's more tax on there. You you want to go invest and make money. Your interest is also taxed. You flip a house, capital gains tax. You buy stocks, you're getting taxed on the back end. You put money into your 401k. There's more tax. Tax, 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 tax. There's tax everywhere. You have to understand the tax game and how to minimize the amount of tax that you pay. Keep in mind, I did not say you want to avoid tax because that is illegal. We were talking about minimizing the tax legally, okay? So you have to understand that the tax system is not made for employees. I'm not saying don't be an employee. I'm saying understand the system that you're in and understand the game that's being played, okay? So if you want to if you want to really understand what's going on, you gotta look under the hood and understand what types of things can happen and what type of things you can do to reduce your tax liability, okay? So if you don't understand that the biggest game in this country is taxes, I promise you, you will be forever poor. Poor, 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 because you're constantly losing money and not getting any of it back, right? So you want to understand how taxes work, why your W-4 and how you fill it out is important. When do you get your taxes done? How do you reduce them throughout the year? And should you really be getting a big refund every single year? Is that the goal? Let's think about that. Okay. Enough is enough, right? You're taxed multiple times on the same dollar, and that you already pay taxes on. So I just mentioned to you guys, right? You're getting taxed a lot on things that you're paying for multiple times. So setting up your tax return allows you to use a tax code in your favor, okay? Now, there are certain things that we have to pay for no matter what's going on. Everyone has to eat, everyone has to find somewhere to live. Everyone has to nowadays have a cell phone, and we need access to certain things for communication, for transportation, for necessities to live and take care of ourselves and our families, okay? The IRC, which is the Internal Revenue Code, is what the IRS uses to sort of incentivize and monitor and penalize all of us throughout the tax system using the tax code, okay? And it determines how people pay taxes, and it also gives you guidance and incentives to how you can reduce the amount of taxes that you have to pay. Now, when you understand the purpose of why taxes were created, it's for the idea that we as a collective country utilize some of the same things like roads, like state funded things, like federal funded things, and it was supposed to be a way that we all put money into a system that we can all benefit from. Throughout the years, over time, things kind of got a little skewed where it became like, well, we're paying for services and things. The amount of tax that we're being paid keeps going up and up and up, but the amount of services we're receiving starts to go down and down and down. So it doesn't make a lot of sense. What are we paying for if we're paying so much, right? And if you're not educated enough, or you're not in that category of the smart money or smart people, you realize that you're just kind of losing on multiple sides, on all fronts. It's not beneficial to you. So you have to start learning and hiring the right professionals to stop bleeding the money is the key to how you change how you play the tax game, right? So I'm not telling you guys out there to go hire a CPA or hire a financial advisor. I'm telling you at bare minimum, you've got to learn the basics. So learn at least some of the things you can do for yourself without having to hire someone to kind of do them for you. If you're like me and many of the clients that I work with, you don't have the time because you're focused your energy and your efforts on other things like your business or your family or or your community, that you don't have the time to sit there and learn all of the ins and outs and the tricks of the trade when it comes to taxes. That's okay. You can still get connected with the right people, be in the right room so that your professionals are on your team working for you, which we'll touch on a little bit later. Okay. So how family question, and as you guys all know, if this is the first time watching the video, when it says family question, I'm asking you a question, so I want your feedback. Okay. How important is it for you to keep more of your money that you're working for? You're the hardworking person breaking your back 40, 50, 60 hours a week. How do you keep more of your money? And how important is it to you that you keep more of your money? I'll give you a second to think about that one and answer that one. Leave your comments in the chat. And if you're watching this on YouTube, leave a comment below because I want to hear from you. How important is that? On a scale of 1 to 10, 10 being super important, 1 being I don't care, I give all my money away anyway. Let me know. Okay, great, great, great. Love the feedback. All right, so do you know what smart people know? Okay. There are thousands of pages in the IRS code that you can use to lower your taxes. So, of course, we're not going to cover all of it here because that's going to be too much. But I'm just going to point out a few of the things that you should know as a basic to kind of get you going. If you want more information, if you want to do more research, we provide lots of free information. If you're on the my monthly newsletter, you'll get that information all the time in your inbox, okay? Because we send out information all the time to anyone who's on the newsletter. But if you're not on the newsletter and you want to do your own research, here's a good place to start. So let's cover some of those topics. What do smart income earners know about this, right? So you always want to pay yourself first when income is coming in. And that looks a little bit different for different people, but the number one idea and method is you always want to pay yourself first. So when you are receiving income from your job or from wherever you get your income from, you want to start putting money away for you, right? So that's either going to go into, hopefully, first and foremost, some type of either investment or savings vehicle that's giving you a return. I don't mention put money in the bank because that's not the most effective place to put your money if you're trying to save it, right? The bank doesn't give you any interest, 0.04 or 0.05. You're under like a half a percent of a point of 1%. That's not a place where you want to put your money. So if you're looking to put your money into something that's going to give you some protection and also give you some type of return in the future, you're looking at a high yield savings account. You're looking at a properly structured life insurance policy. You're looking at maybe the stock portfolio, a stock investment that is um, maybe an ETF or an index fund, depending on what's the right thing for you, right? I'm not giving you personal advice. I'm giving you places where you can put your money, okay? But you always want to take a portion of your paycheck and put it aside for you. So you always pay yourself first, okay? Another thing that you should also be looking at if you're working a job, I hope that your job offers you some type of retirement plan. So we're talking about a 401k, if you're lucky, a Roth 401k, if you have a 403b or 457, you want to, or some type of defined benefit plan, you want to start putting your money into those places as well, as long as those places are doing matches. If your job does not do a match, this might not apply in totality. But if you're getting a match, let's say your job says we'll match you 3% or 5%, you want to put in out of your paycheck the amount of money that's going to give you the max match, right? So if your job says we'll match up to 3%, you put in 3%. If they say up to 5%, you put in 5%. If your job does not do a match, you should still be putting a portion of that money into your retirement account because it's a tax deferred account that can grow for you over time, but it'll reduce a little bit of your tax burden right now because you're going to pay it later on. But you should be saving money for the future, okay? Uh, if you're not getting a lot of benefit or matching from the job, you want to now look at your high yield savings account. You want to look at HSAs. You want to look at properly structured life insurance policies because I know some of your jobs will give you a life insurance policy through work. And that sounds like a great idea until I ask you this question. What happens if you leave your job? Do you get to take a life insurance with you? I know the answer. It's no. Okay. So your job's not going to let you take life insurance with you. So that means if you've been working at your job for 5 years, 10 years, 15 years, you're 5, 10, 15 years older when you leave your job than when you got there, which means life insurance is one of those things that the younger you get it, the cheaper it is. And the later you get it, the more expensive it is. So why don't you get it early and pay for it as affordable or as cheaply as possible versus coming back to it later and paying twice the price for less coverage, right? You get the most amount of coverage when you're young and healthy, not when you're older and getting closer to your golden years. So do yourself a favor, get your own policy so you control it, you own it, and you can have it set up to be as beneficial for you as possible. Because the one at your job isn't that great anyway. It doesn't give you a lot of coverage. But look into it if you haven't thought about it yet. All right. If you have questions on it or you want to get an idea of what quotes can look like, you can reach out to me um, through the website or through any of my social media, and I can set you up with an appointment to get a free quote. Okay. So if we're talking about 401ks and retirement plans. If you can get the match, get the match. If they don't have a match, put something away, but you have to put away what makes sense for you based on your bills and your income. And if those things aren't in order yet, take a look at the budget, right? But we're talking about taxes for right now. So we're trying to keep as much money in our own pocket. So when you do put money into your 401k, for every $100 you contribute, to your 401k, 30 of that is what you don't have to give to the IRS, right? So you can see right away that there is a tax benefit and incentive to putting money into your 401k because according to the government, more people that have their own retirement nest eggs ready and set up for them are less reliable on what? Social Security, because that's a government subsidized thing that you're paying into, but you're not paying enough to keep you afloat. So they like to incentivize you to put money into your own 401k so you don't rely as much on Social Security or other federal benefits when you get older and are retired. Keep in mind that $30 out of the 100 is based on your tax bracket because it is a part of what you actually pay in taxes. It's affected. Your tax bracket affects how much of the savings you get with your 401k. But good rule of thumb, it's about $30 for every $100 you put in there. Okay. You should, another thing that everyone should know is about the deadline for when your taxes are due. Okay? Everyone knows in general, or you should know if you don't know, now I'm telling you. April 15th is normally the tax deadline for the United States, right? For all your personal tax returns is going to be April 15th. Okay? And this is an important date if you owe the IRS money. Now, everyone kind of does their taxes between February and April, well, beginning of April, because you can see if you owe the IRS money or not, or you can see if you're gonna get a refund. Now, if you know that you're getting a refund, you don't have to get your taxes done by April 15th, but it's a good rule of thumb. Just so you know, if you owe money to the IRS, your tax return has to be submitted to them by April 15th. If it is not submitted by April 15th, you now will be deemed late and they can tack on interest to the amount that you owe to the IRS. So that means they're going to take more money from you because you didn't put the paperwork in on time to tell them how much money you owe them. It's crazy. I know it makes no sense. But get your taxes done on time. If you're going to owe money, you got to do it before April 15th so you can submit it and then send in your payments so that they can know how much money they're going to collect from you because the IRS is just a big collection company. That's all they're doing is taking our money from us every single time, every single opportunity or turn that they can get. This is the country that we live in. This is the game. So we're trying to figure out how do we play the game better. Okay? If you do not owe the IRS money, you actually have up to 3 years to claim your tax refunds. Okay, so there's not necessarily a rush to do it, but you should do it. You should definitely file your taxes, get your documents in. If you're getting a refund, make sure you do it within that 3 year window, because after that window, the IRS is no longer entitled to give you a refund. That doesn't work if you owe them money because they want their money no matter how many years goes by. But if they owe you money, they tell you got a 3 year window to actually get it back. So do your taxes so you know how much you're filing for in terms of owing or receiving and know your timelines. Okay. If you have a business, we're talking that's in October, but we're not talking about that today. We're talking about just personal tax returns. Okay. One of the biggest things that smart people do with their money is that they know that the IRS or the IRS tax code is set up to incentivize you to do the things that they want you to do. And the number one thing that the IRS really wants you to do is to be a small business owner, right? The IRS tax code is not set up to be advantageous for employees, but it's very advantageous for small business owners. So what does that mean to you, right? You said, I don't want to run a business. I don't have any businesses that I do. I don't know how to really make money on my own. I just like to work my job. I like to go to work and get paid. That's okay. That's perfectly fine. But many of you have hobbies, right? You have things you like to do. You have talents that you could get paid for. If you set up a small business to do the things that you're already doing anyway for fun, maybe you can add another piece to it. Maybe you can teach someone how to do this thing. Maybe you can make things and then sell them on different websites or different communities. When you create a LLC, what could be a sole proprietorship, an LLC, or an S corp, if you do those things, you are now qualifying as a small business. So you get to take advantage of some of the different things inside of the tax code. And some things now can become a write-off to reduce your taxes. So now you're making your money from your W-2 when you go to your 9 to 5 every single day. And you're also trying to make money in your small business. Maybe your small business isn't really making that much money, but you're still spending money and generating expenses to try and make that into a viable business, that is tax deductible, right? So you have to understand how that works, right? Some of your expenses you can now write off depending on what the business is, your clothes, your cell phone, your travel, your services that you use to communicate with other people, right? You can go to conferences. You can do lots of different things depending on your business that you can now use as a deduction against your personal income to reduce your taxable liability, which means you get to keep more money in your pocket. Okay. This is the game that you have to learn how to play because it's very, very important that you're doing all of the things you can do to help yourself. And I want to be very clear. If you're getting super large refunds from your tax returns, you're giving the government money. You are severely overpaying in taxes and they're refunding your money later on down the road. That is not a good thing. You should not be doing that all the time to the point where you're getting really big refunds. You don't want to overpay the government and give them free loans. That is not the goal here, right? Everybody thinks of it as, oh, I'll give it to them now and then I'll get a big refund later. That's not what you want to do. If you're doing that, you're giving the IRS a free loan. They're not going to give you one, so don't give them one, right? Keep as much money in your own pocket because that's a better place for it to be than in the IRS's hands, okay? So, some of the things that you should definitely know to do and what smart people do is that they create a team. Teamwork makes the dream work, as my son loves to say, okay? Who are some of the people that you need to have on your team? Whether you are running a business or you're just working on W-2, someone needs to be watching your books, right? So you either need a bookkeeper or you need to be your own bookkeeper. bookkeeper because you need to be tracking your income, tracking your savings, tracking your investments, tracking your budget, tracking your money. The thing that you pay attention to expands. So if you want more money, pay attention to your money. Okay? Beyond having just a bookkeeper, you want to have a really good CPA, certified public accountant. If you have a good CPA, your CPA can tell you additional things that you may not know about to help you save money on taxes or put money in more advantageous places so that you're utilizing the system properly, right? If you also should be having a good financial advisor. Now, there are lots of conversations about why a financial advisor is good. Maybe they're charging you too much. Either way, I'm a licensed financial advisor, and I'm telling you this from a person who has learned about money, who advises people about money, and who is paying attention to my money all the time. A financial advisor is worth their weight in gold if they're doing more than only just putting your money into stocks. Your financial advisor should be telling you about stock investments, should be telling you about alternative investments, should be connecting you to a good CPA, should be giving you opportunities for additional investments, maybe private markets, maybe into real estate deals, maybe into things that not only serve them, but things that also serve you. Because a good financial advisor will tell you about things that works best for you, not only for them. So take that information and process it, okay? A good financial advisor or a good accountant should be able to plug you into multiple people, like a tax attorney or a tax strategist. These are all things that you should have a person inside of your team that is connected or plugged into other networks so that you get to sort of use the plug and take some advantage of what you're paying for, okay? There's an old African proverb. If you want to go quickly, go alone. If you want to go far, go together. Having the right team will get you a much further way to your goals and your dreams if you're doing it properly. Okay? My goal here is just to teach you how to ask the right questions to the right people so that you can educate yourself and be as self-sufficient as possible. But I'm tired of people getting scammed out here. There's a lot of scammers, a lot of gurus telling you things they don't do, telling you how you can make money doing X, Y, and Z, selling you credit like it's income. This is not what we're here for. You got to know what questions to ask. You got to know the right things to ask and the right people to ask them to. Qualified professionals are important. Everybody has a YouTube page and an Instagram and a mouth to sell you something, but do they know what they're doing? Are they a qualified individual? Okay, so please, we do this every week for the purpose of educating you and teaching you to ask the right questions, to know the right things to do. Whether you do them or not, it's up to you. But I'm hoping that you're taking this information and it's being of value and helpful to you. My mom and my grandfather used to love to say, you can take the horse to the water, but you can't make him drink. The action's upon you. So, if you want to learn more about money strategies that involve taxes, passive income, or any other topics, you can reach out to me through andretalksgreen.com or through any other of my social media. Hello, here goes all of my social media stuff right here. So Instagram, TikTok, YouTube. These videos do get put up on YouTube as a replay, so you can go there to watch them and cover all of the topics if you've missed any of the weeks, or you can connect with me also on LinkedIn. So some of the other family topics that we also talk about, here's just a few of them, okay? So we talk about how to invest in real estate. We talk about what types of insurances we should have. We talk about private markets or private equity. Should you get into them? Are they a good idea? Can I build wealth with them? We talk about LLCs and S corps. Should you buy one? Should you set up one? Should you have one? Right? We educate on annuities. What are they? How do they work? Passive income, 401ks, 529s. We talk about all of these topics around our money. We talk about things that not are not necessarily personal to us individually, but about our parents who are now retiring, right? Are they able to retire comfortably? Who's looking at their retirement? Who's setting them up for the future? How are the kids going to get through college or get to college, right? Those are family conversations, which is the purpose why I even started doing a family meeting, because we're not talking about money together enough. So this is why we started doing it, right? One of the things I ask everyone is, what's PMI? Some people know, some people don't. PMI, private mortgage insurance. Do you know how that affects you? Maybe you do, maybe you don't. If you don't, come on back to attend the family meetings because these are the type of topics that we're talking about and so much more. We talk about lots of different topics across the board. And if you have suggestions, put them in the chat, put them in the comments because I'll cover them as long as you want to learn them. So the next family meeting will be on February 1st at 7 p.m. If you missed the live, you can jump on YouTube to watch the replay because I put everything up so that they are saved and you can use it as a resource. I hope that you guys are finding value in these conversations and these topics. And like I said, I'm open to as much feedback as you want to give. So if there's anything you want me to cover in particular, leave it in the chat or leave it in the comments, and I will see them. I want to thank you so much for attending today's family meeting. I hope that you can do me this one ask, right? Which is share this thing with three other people. So put it on your social media, send a link out to someone else. Just my goal is that we share this information with as much of the community as possible so that we can make a difference because I truly believe that we will be the generation of change for our families. You may not have come from a millionaire family, but a millionaire family can come from you. So I hope that you guys enjoyed today's talk, and I can't wait to see you next time. Talk to you soon.